Welcome to Java. Thank you kindly for joining me. It is April 13th, 2025. It is also Sunday as I am doing this. Now, last week ended a very volatile week. There was a massive amount of things that were going on. I've had the opportunity to look at a few of these and going forward, and I would like to bring forward some of these highlights for you that I believe we're going to be affected by in the near-term future as well as longer term. I'm going to cover a few things that are going to be signals in inflation and with assets moving forward. So, with this, let's get started, of course, with the calendar and what we can look forward to. Now, we've still got quite a few Fed presidents. They have entered into the calendar on a regular basis now. Their main goal is to keep this market managed as they can, more with what they say rather than any real physical actions that they come into. Now, it's very important when they speak because their guidance forward is what the market is looking forward to, whether they will cut rates and give easy money. So I'll speak a bit about that today as well. Now, nothing really Monday other than the speakers. Tuesday, we get a few reports. Wednesday, some retail sales that we'll be looking forward to, and home builder confidence. That is going to shine a bit of a light on the interior as far as housing going forward, which affects what we call the perceived wealth effect. Now, Thursday, we get some actual numbers in jobless claims, and even though they're manipulated, we'll be watching that prior to the market open because the numbers that come out are what they use to make their movements with. We'll also get housing starts and building permits. Now, these will go along with the builder's confidence and will show us a light into forward of what they're looking at that will affect kind of sentiment, if you will, for the underlying. So Friday, of course, we got a Fed speaker. There's nothing really huge with that. It is Good Friday going into the weekend with a holiday. So with this, let's take a look at a couple of the things that are really the macro, larger thing to be looking at. So chart of the week that they're saying is showing the fear gauge is flashing a possible Bitcoin bottom. Now, I'm going to posit that it's not simply the bottom in Bitcoin, but broad assets in general. And when it is broadly a bottom for assets, really what it is a gauge of inflation because we're losing currency power. Now, few assets I like to cover is the larger ones. Bitcoin as a signal for cryptocurrencies, the one that I like to watch. Another one is real estate. Now, real estate, with all of the home builders' confidence and things that we're getting coming out this week, is going to be very interesting. Now, in the United States in particular, there's several states that are in serious decline. These states were also the ones that had serious price increases during these past couple of years in all of this run up. Now, I think a couple of interesting things of note are showing what is going on with this. Now, we've got real estate agents. This is a little play on words, hatching a new marketing plan. So, chicken coops, because of the price of eggs going forward, that listings that mention these have grown 78%. So, if you have a home and you can mention that it's got a chicken coop or an area for chickens, you're much more likely to sell your home faster than others than without. Now, I'd like to point out something that is kind of underpinning, if you will, the price of homes and why they want to protect this. And this is because a large part of most states' property tax revenue is a major portion of their income. So, and I'll go into this a little bit deeper, a little bit down the road, but what is going on is property tax is now becoming a larger amount of revenue by a significant amount than income tax for many states. So they can't afford to have this to drop because if they do, the government and public sector will not have enough money to spend for their budgets. So this is actually something they don't have to ask about significantly. They can do increases uh, in small amounts without a lot of questioning. So expect this to continue. And if the price of housing drops, they lose out on this. So expect this asset as well, real estate for the most part, will begin a climb again. So speaking about all of this, again, going back to the currency, we've got Jamie Dimon himself saying looser capital rules are good for the market. Now, capital rules, of course, that means cash. So looser rules for the currency is what he's getting at, saying recent turmoil in this bond market is highlighting the need for more capital, liquidity, and flexibility. So he's calling for more printing of the currency, which causes inflation, and it also decreases the value of the dollars that you have. So again, calling into this. Now we've got the collapse of the dollar, showing the largest damage right now is to the US brand. They're talking about going back to this bond market and how it made the president in the United States turn on his policies. But actually, what happened is they're just creating another bump so that they can continue. Now, with this, they speak about the uh, US brand being hit. He just announced an exemption for Apple and NVIDIA with these tariff exemptions. Now, they exempted computers, laptop computers, electronics, phones, smartphones. So, by exempting these, he's handed these companies an in, first off. Secondly, China is the largest maker of these. So, it's all of the stuff that the United States wants. Thirdly, it's also pushing forward this agenda with the tech and between the manufacturing because they cannot start producing in the United States faster. So, this is another way to balance out this global trade, if you will. Now, we've got the Fed President Collins saying that they are absolutely prepared to step into the markets. Well, they're not supposed to be stepping into the markets, but they have already. But to hear them actually admit this is very interesting. So, with this Bitcoin in United States stocks having a nice bit of a rally with this, because this means the Fed is going to turn back on that printer as everyone is calling for on more easy money. So, I want to talk about India in a bit of a shift here. Global funds are talking about India markets as a haven in all of this chaos. Now, the major trade imbalances, and I'm going to go back to this in a little while, but this shift, Apple just shipped multiple tons of electronics and phones for the products to get back into the United States to exempt them from these tariffs. So looking into external funds or emerging markets or other areas for safe haven is what is really happening. So the United States dollar is taking a serious blow. It's below, a dollar is below 100, below a dollar right now. And the relative strength is continuing to drop. This is all inflation, but we've got a shift in the currency flow. And this is not a good thing as far as what is going forward. So with all of this, what I want to talk about is what we're watching behind this is a shift change in regime backed by the currency. But I want to give a little reminder here of what currency is backed by, and that is indeed the military. The US dollar, as it is a printed dollar, much less a digital dollar, is not valued for anything. You can't eat it. It is only good for trade. It's supposed to be a unit of account, but with all of the inflation, they have destroyed that value as accounting as well. So, what is it backed by? Military. So, here I've got a ranking 2025 military strength ranking. This is the latest. Finalized global firepower. So you can see here they use 60 individual factors, but my point is the largest powers here, United States. Number two, who have they been chumming up to the most recent days? Russia. China's third, and then India fourth, Also, another one, the United States has been attempting to uh, be in good terms with. We've also got South Korea down here and the UK at number 6, interestingly enough. Now, we've had a shift between France and Japan. Japan was number 7. So this just gives you a view of who could actually kind of step in with things. We've got France trying to build their global power, but they don't quite have the backing yet. So in the backdrop of all of this, we've also got this new announcement that there has been a new deal by Hexeth to control the Panama Canal. They've made a deal, so they have in effect, locked this. They get free passage, of course, to United States military ships, which they actually had prior to it, because Panama has been relying on the United States for military. But now they've got port control on both sides. So they're controlling this. It's not just security, but also trade, global trade that must come through this area, and they can now control a lot of the pricing. So the summary of all of this, thank you for sticking around to get to the end, but in short, what this means forward is a return to the gradual increase market value of stocks and other assets. Now, as the value of the dollar goes down, asset prices go up. So we're going to look for a back return for the stock market, coming back into increasing back up in value. We're also going to watch gold is at a point where it is going to initially take a hit from this as the stock market increases. Money will flow back from gold, I believe, in the short term, back into stocks for one more run is what we are looking at. So we're going to watch other stocks increasing as the dollar decreases. Gold, because it had its run up, is going to have a temporary hit before it resumes again. And we're just going to see these shifts, but I'll be with you every morning prior to the markets open. So until I see you again, my friends, I hope you've had a wonderful weekend and stay free.